Okay. Good afternoon, class. I think we can start now. Yeah, we can start now. Sorry, we couldn't start on a normal time because I attended funeral service for our one of our board members' daughters. You see. So that was why. Okay, so initially I thought I was gonna come late, but apparently I gained some time, so that's why I say we should start at 4. I hope the rest are aware that we are starting at 4. Yeah. I hope they are aware that we are starting at 4.
Hopefully.
Hmm?
I said hopefully. I don't know whether they were online or not.
Well, anyway, the source of information is the WhatsApp. So when I said the class schedule, well, the rescheduling to 4, it was not more than I think 30 minutes. I changed it, so I think that should be fine. So in any case, we're going to start. We're definitely going to start, inshallah. So yesterday we were looking at the last topics of accounting for short-term decision making. Okay, and the last one we did on the accounting for short-term decision making was accepting or rejecting orders. Prior to that, we did some break-even analysis, and then also whether to, further process a product or to buy it as its, a raw stage. Okay, so any questions on those? I think we've covered them in details yesterday. If you have any issues with them, please refer to the video. Unfortunately, I couldn't load them yesterday, and I was busy throughout the morning also. But as we are talking, I'm loading them on the background. So after the class, hopefully, you should be able to. In fact, already 2 have been loaded. It's out of 6 videos, 2 have been loaded. So the third one is about 42% now. So I'm sure before we are ready for class, they will all have been fully uploaded to the YouTube channel. Yeah. Okay. Take note of that.
Yes, Mr. Fufa.
Yes, sir.
Like the contribution target, those is the same as like the targeted sales in value.
The contribution target.
Yes, whether it is the same as the targeted sales in value.
No, it's different. Just like you have sales different from contribution, the target sales is the same as sales. The only difference is it's a planned sale, a budgeted one sort of. So targeted sale and sale are treated the same way, just like contribution and a targeted contribution are also treated the same way. Okay.
Yes, that one. It is. What about the volume target?
The volume target is also the same as the unit. It's just like production unit. Budgeted volume target is the same as budgeted production units. Is that clear?
Yes, like for this one, the break-even point, the other one, like the break-even chart, the profit volume chart.
Okay.
Like it is normally start at the negative side, below
Yes.
the x-axis.
Yes, below the zero line. Yes, anything below the zero line is losses. Yes.
Yes.
Anything
In that
above is
case,
profit.
yes. What I want to ask is, like, are you going to start from where the fixed cost is? Like, when the fixed cost is like 4,000, it is going to be negative 4,000. Whether you are going to start it at the point of fixed cost or below the fixed cost.
No, the fixed cost starts below the line, below the x-axis, isn't it? So
Yes.
the fixed cost applies to both the downside and then also the upper side. It depends on the situation where the application of fixed costs, whether it gives you a loss or it gives you a profit. Okay, but it applies to. So it's like when you look at the first chart, okay, which is the revenue versus cost chart, break-even chart. You see, everything is on top. Okay, that's where you have the losses. Then that's where you have the profit, and everything starts from the zero line. Okay, and the sales starts from zero and it runs perpendicularly because the sales quantity or the sales value varies with the activity level. Okay, and at some point you see fixed costs started, so fixed costs remain constant throughout. Okay, and then of course the intersection of the total cost. You know, the total cost starts from where the fixed cost line started, okay, and then goes up. So in the intersection of the total cost and the total revenue is where the break-even analysis is drawn, isn't it?
Yes.
Okay. Okay. Right. So I hope that has answered your question, Umar.
Yes, it does. Like for this one, the profit and loss chart. In that case, like where the break even is where the x-axis is drawn. Means that anything above the x-axis, it is a profit.
Yes, anything above the x-axis is a profit. Anything below the x-axis is loss.
Okay, thank you.
Exactly. Yeah, that's the way it goes. Okay. Right. So, any more questions or interjections before we start our topic today? Okay. So I think we should move. So today we're going to look at the last set of topics for this course, MA3, and that is accounting for long-term decision making, otherwise known as investment appraisals. Okay, investment appraisals. Okay, so like I said, in accounting, if you refer to short term, you're talking about any period up to 1 year. And any period more than 1 year is referred to as long term. So decisions that are going to affect the business for more than 1 year are called investment appraisal decision or accounting for long-term decisions. Okay, is that clear? So this is the last set of topics we're going to look at. And under this, we're going to look at when we say investment appraisal, what do we mean by investment appraisal? What are some of the processes we take in investment appraisal decision? Okay, and next we're going to look at the various techniques, and some of those techniques are the payback period, the accounting rate of return. We're going to look at how we calculate our terminal value, or in other words, how do we compound and how do we discount. Okay, discounting is of course the opposite of compounding. Okay. Then we're going to look at our famous DCF techniques, discounted cash flow techniques, known as net present value analysis or net present value technique. Okay. And we're going to look at the last but not the least topic, the internal rate of return method. Okay. I'm sure some of these topics you must have done them in your earlier study. So we're going to go in details in this study. And to be honest with you, these techniques are very, 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 very important, especially the DCF techniques, the discounted cash flow techniques. You are going to meet them again if you're going to continue studying accountancy, whether at professional level, ACCA, CIMA, or any professional qualification, or at master's level, most likely you're going to meet investment appraisal, especially DCF techniques. They are very, very, very important and very, very relevant. Okay, so let's start the ball rolling. First, if we talk about investment appraisal decision, what are we talking about? Okay, investment appraisal. What is investment? What is appraisal? What is an investment in a business sense? If you talk about investment, what are you talking about?
Investment is putting in capital into a business that you think is going to be profitable for you.
Okay, yes, that sounds good. So investment means injecting capital into a business which you think is going to be profitable for you in the future. Okay, that's one form of investment. What else? There are so many types of investments, isn't it?
What about like to buy something like shares or land, which those things like for when you buy a land today, after 2 years maybe the value of the land will rise.
I appreciate, yeah, very true, very true. So, very true, Umar. You can acquire land now. So if you acquire land now with the aim of selling the land in the future, of course, it is an investment. And it will fall under this category that we are looking at. Okay? Very, very, very true. Because land is among the few assets that keeps appreciating instead of depreciating. Okay? So in fact, one best form of investment is acquiring real estate, acquiring land that you're going to sell in the future. Okay? Because especially lands in the combo areas, if you buy a land today for let's say 100,000, if you want to dispose of that land in 5 years' time, I bet you are going to get more than 500,000 from that land, or sometimes even more. Okay, so the best form of investment, at least in the Gambia, is investing in a land. Okay, it always appreciates. So correct. And you've spoken about shares also. Yes, investment in shares is also another form of long-term investment. Okay, how that works is in the Gambia, it's not so typical, but in the West, most of the companies, they float their shares on what we call a stock exchange market, so that outsiders, investors can buy their shares. And when you buy the share today for, let's say, $2 per share, let's say you buy 1,000 shares, that means the value of your investment will be 2 times 1,000. Okay, that will be what? 2,000. Okay, so $2,000 worth of investment will be recorded for you, and then they'll give you a share certificate. Okay, what happens is every year, once the organization computes its books and audit is carried out, shareholders benefit from what we call what? What is the benefit attached to shareholders? What do they get in return for their shares? Dividends. Okay, they get dividend payouts. Okay, so and if later on you decide to sell your share, you can sell it at a profit. Like if you had bought your share for $2 each, depending on the value of the share in later years, you could even sell it for $5 each. So every year you will receive your dividends, and again, if you want to sell your share, you can also sell it at a profit. Okay, excellent. So that's also another form of investment. What else? What else do we think of as an investment, which is common in the Gambia. What about if you open a bank account, a savings account, which of course is going to be there for more than 1 year, or you invest in treasury bills, or you invest in sukuk al-salam, and stuff like that. So all those are forms of investments, okay? Because once you put your money into them, your expectation is going to pay you dividend in the future. Okay, so what is investment appraisal? Investment appraisal is an analysis of those investments that you are doing in future, whether they're going to make profit or not. Simply, okay. So investment appraisal is a way that a business will assess the attractiveness or profitability of possible investments or projects that will last for over 1 year. Simple. So that's what it means. You want to analyze whether the investment you want to spend on, what the investment you want to make, whether it's going to yield you profit over the life of the investment. Okay, somebody wants to say something?
Yes, Mr. Fafana, afternoon.
Afternoon, Mohammed, how are you doing?
Alhamdulillah. Yeah, what about in the case of this financial institution? I mean, an institution as a whole, not like a person or a particular individual, yeah, but the whole institution as a whole, yeah.
Yes, yes, you could have the institution also can invest. Yes, it's just like for example, Social Security acquiring shares in the transport company. In fact, I think they almost own them. So yes, the shares of the transport company, I think majority of them are owned by Social Security. The GT, I don't know, they call it GTSC or whatever it's called. Okay, yes. So just like individuals can own shares, organizations also can own shares. Okay.
All right, thank you, yeah.
Okay. Wow.
I think even building schools and madrasas, they are all form of investment because schools are long-term assets, and also you earn revenue there.
Yes, true. Yes, you earn revenue there. True. That's right. Good. Okay, so let's move on with our slides. Well, example of such projects, there are so many of them. We've already spoken about, so many of them. How to call it? Schools, madrasas. Somebody has just said that. School madrasas, yes. Investment in treasury bills, investment in sukuk al-salam, investment in shares, acquiring real estate, land, and so on and so on. So many. Plant for manufacturing, and stuff. A plant is, heavy machinery that you could use in manufacturing. Investment in real estate, we've mentioned it, purchase of shares in company, and so on and so forth. Okay. So those are the types of investment that we can think of. Yes, Omar?
Yes, you said that investment in treasury bill. That one I don't understand.
Okay, you don't know about T-bills, treasury bills? Treasury bills is a tool that the government use to control the circulation of money in an economy. So what they do is you know about treasury bills, isn't it?
Yes, I understand it now. Like the investment appraisal, based on what you how you divide. Let me say and see whether what I have read is correct. It is an analysis to know whether your correct investment can earn you a profit or not in the future.
Yes, something like that. You can word it in different ways. So that is correct as well. That is correct. Okay. So yeah, the treasury bills, the equivalent is the sukuk al-salam. That's the Islamic version. Okay. So it's like what government does is it will allow banks to collect money from people, in a form of deposit, and they will be given interest, or in the case of sukuk al-salam is what profit. Okay, and so government will, by making it lucrative, people will be how to call it, bringing their money to the bank and kind of deposit. So by doing that in the short term, they can be able to control the cash in circulation in the economy. Okay, and all that is borne by, of course, government pays the interest. That's the central bank. But in turn, they are able to control inflation. Okay, so that's what T-bills can do. Years ago, they used to be very, very attractive, but now the CBG is definitely controlling because before, most banks, they don't do much work. So what they do is they collect money from people and invest it in T-bills. Okay, and then they go to bed and sleep. Okay, so when the T-bills mature, they receive heavy interest. So it used to be that lucrative, but not anymore. Not anymore.
So I think T-bill is short-term investment.
Yes, it's a short-term investment. Yes, it's a short-term investment. They are usually up to 1 year, so they may not fall under this category. They are usually within 1 year. Okay, 3 months, 6 months, 1 year, like that. Okay, so right, let's proceed now. We know what investments are, what long-term investments are, what's their features, what do we expect in return, So now, what we want to know is, how do we take these decisions? How do we decide to buy a plant that we're going to use for manufacturing of soft drinks? How do we decide to invest in debentures? Debentures are long-term loans. How do we decide how to call it, invest in long-term savings and stuff like that? Okay, so first there has to be an origination of the idea or of the proposal. Okay, so usually this can come from the management of the organization or from staff. Okay, like maybe at one staff meeting, the CEO says we have to, engage, in a profitable venture in a project. We need to execute a project. So we welcome ideas from staff. Okay, Umar can say, okay, why can't we buy, a machinery to, bottle, this waste melon and the waste mango whenever their seasons come. Okay, maybe Ibrahim can say, but wait a minute, why don't we invest in in a printing machinery to how to call it, be printing books for the public, color printing, card printing, magazine printing, and so on and so forth. So somebody could also come with different ideas. So the ideas will flow, at the initial stage, and then the second stage, you have to screen those ideas. Okay, Mohammed says, or let's say Umar says, let's buy a machinery to, produce mango juice and so on. What costs are we thinking about? What benefits? Is this economically viable? Is it financially viable? Okay, this guy says we should buy a printing machine. Okay, if we buy a printing machine, how are we going to get a market? Are we going to get enough people to be able to pay, to be able to make profit within a short period? To be able to, how to call it, make enough to recoup the initial capital and so on and so forth. So there will be a lot of project screening until we come to the third stage, whereby we will have got enough ideas, enough conclusion as to which project to go for. So that's where analysis and acceptance of which idea sounds best. Okay, so the third stage will be there. And then, of course, once the analysis and acceptance is completed, then that means what is going to follow? Implementation. Then next you have your monitoring and review. So whilst you are implementing, you monitor and say, okay, we estimated that this particular machinery we're going to use for production of drinks and so on and so forth is going to make this much every year. It's going to, we're going to incur this much in terms of variable costs, in terms of fixed costs. Is it meeting it? So monitoring and evaluation, this will, how to call it, consist of doing a lot of, variance analysis, and reporting, like that. Okay. So these are some of the stages that we will undergo, and then based on whatever conclusion we will reach, then we will go into take this investment decision. Okay. So just to how to call it, these are some of the stages that we're going to follow. Some it may involve some additional stages, some it may not have to go through all the 4 stages like that. Okay, good. So now we can go straight and discuss the techniques one by one. So the first technique we're going to look at will be the payback period. Okay, the accounting rate of return will be the next, and then discounted cash flow techniques, the DCF techniques, which includes the discounted payback period, the net present value method, and the IRR. Okay, so these are some of the topics that we're going to look at, like I said. Okay, good. So we're going to look at the payback period. First topic, payback period. Have you done payback period before? Have you done payback period before?
Yes.
Okay, excellent. So what is payback period? If you talk about payback period, what is payback period? To revenue?
It is a period that takes a company to payback period is a period which takes company to